The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the wheat markets found a little bit of support once again on Thursday. Livestock as well found some green on the screen there, while row crops, a little bit of pressure as we wrapped up Thursday's trade. Maybe a little bit of consolidation ahead of the October WASDE report on Friday, potentially. Crude oil surging again. A lot of things to discuss. Joining us here today for market analysis, let's bring in Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to talk with you again this week, sir. Hope you're doing well.
I'm doing really well. And, when I look at the markets and I think about things that are going on around the world, I am a little bit distracted. We just saw a hurricane blow through Florida for the second time in 2 weeks. We've got the war in Ukraine. There was, again, a missile attack overnight, port structure in Odessa. You've got just more strife there. It's just a big concern. So, as we kind of look at things, we'll keep things in context, but just some interesting kind of world on fire things, I guess, at the moment. So,
yeah, no, that's a good way to put it. I think, too, all these things kind of coming together, it hasn't caused necessarily a powder keg explosion in these markets, but it just feels like as so many of these things come together, Brian, it's adding some potential fuel here to the fire, so to speak, if enough things come together here, it seems like.
Yeah, and so when we look at for instance, who's in the marketplace, we've seen over the last 5, 6, 7 weeks, 8 weeks, we've seen a kind of a steady reduction in short positions by, let's call it, managed money, large speculative positions, and maybe even looking to go long. And well, why is that? Well, maybe there's world uncertainties, maybe just the idea that big crops are already known quantity and they push down as far as they're going to go in context. But you're right. There's just just headlines. When you read, one of the headlines this morning was that the Russian, I'm going to say ag ministry, going to meet tomorrow, talking about, did they oversell? Maybe it's a sign that the crop wasn't as big, right? All of a sudden you might have some internal food concerns there or internal supply concerns. But when you look at these markets, usually it's in the grains, it'll be wheat, or outside markets, it's energies that generally start, kind of raising some eyebrows. And the way this energy market has been so volatile lately, in the Middle East so volatile, they're again today putting a lot of risk on back today with another large gain in the crude, at least as we're talking, of over $2.50 a barrel.
Well, and thinking about that as well, and just, I don't know. I know we got a consumer price index out as well today. So you got all the economic things that we've been watching for months with inflation. So let's look at this from the producer perspective and managing our risk here. Mm-hmm. How do we manage our marketing when we're busy with harvest and we have all these different world events that we can't really control what happens and how they impact the market? So maybe your thoughts there, kind of big picture, how we manage our risk right now, Brian?
Yeah, it's a super question, because farmers are busy, right? And time is money, and the weather's good, and you got to get things done, right? Still, take 5 minutes, call your advisor, look for strategic ideas. Don't look for outlook ideas. You could spend an hour talking about all the things we're going to talk about today and not come away with anything that's of merit to execute. So my message today is be balanced in how you approach this. I look at things like the bean market starting to slip again here, right at a critical crossroads. Either this might fall apart, or all of a sudden it's just a buy opportunity. We don't know. It probably depends on the southern hemisphere weather that you don't know, that we can't control. So let's think about, how do we shift that risk, or where the greatest risk is? How do we stay in the marketplace? So take 5 minutes, have those conversations, ask the question to your advisor, what strategies can I do to mitigate risk or stay involved, rather than, well, whether it rains, it might rain. There might be problems in Russia. There might be problems. There could be a missile attack, one thing after another. It kind of feels like we're kind of stirring the pot. Maybe nothing, but I feel it. You brought it up. You're feeling it. These things have a tendency to sort of really exasperate themselves if they come to life. So work on a balanced approach.
When I think about this too, you mentioned this at the top with the destruction from the hurricanes. We had Helene, now we've had Milton, and thinking about everyone in the path of this storm. But I think about in terms of the impacts we could be seeing to domestic fertilizer production in Florida. Phosphate, huge in Central Florida. It's been right in the path of Milton, coming here at a critical time when we got fall fertilizer windows coming up here very soon. So I think about in terms of risk management, fertilizer markets start spiking, things of that nature. I mean, it just kind of comes back to if you can get your pencil out, sharpen it, have that conversation you said, try to mitigate as much risk as possible here right now, Brian.
I'm just a big believer from an end user perspective. When markets have been suppressed or markets are down and they start moving up, it's easy to say, well, we'll wait for a pullback, right? I'm kind of a more of a bird in hand mentality. Every week I write a paper. It's called The Perspective. My perspective last week was on this energy complex. How can you outguess war zones and war, right? We saw Ukraine, Russia, grains blew up and then they fell apart. Well, what about energies? What if that really is impactful to energies and all of a sudden crude surges to 100 or $120? How does that impact you? Maybe it's time to actually secure the inventory, and then you need to manage the inventory. So it's no different than you as a farmer. If you're a corn farmer and you have a crop in the bin, you manage that. How do you manage it? Well, you sell ahead, you forward contract, you sign basis contracts. There's just a myriad of tools that might be for the right person at the right place at the right time. Again, know you're busy, keep it safe, but just have those quick conversations and ask what is the strategic approach that we need to take, and cut that conversation down to 10 minutes.
Thinking about the October WASDE report coming up on Friday, as you look at that
Another
report,
variable.
Brian, another variable. Anything? What are you watching for the most closely? I would say for that report coming up on Friday.
It's a mixed bag. I've been at it for a long, long time, and I look at some of these yield results we hear back, and we try and survey a lot of farmers in the sense of just how's it looking? What is the theme? So the theme that I'm hearing is that yields. I'm not hearing, boy, these things are just horrible, and I'm not hearing, oh my God, this crop's a lot better than I thought. I'm hearing corn's what we thought, maybe a little better, maybe a little worse. Beans seems the dry weather impacted them a little bit more, maybe a little bit less. So if I'm looking for any potential surprises, I think it would be changes to yield. My gut is the USDA is probably going to leave corn around 183 and at point 0.4, and on the soybeans, I don't know. The average estimate is 53. The range is kind of tight, 54 to 51.7. I think I'd lean my needle a little bit closer to 52 and a half. 50. So that's what I'm expecting out of the report. Whether they make any wholesale balance adjustments on demand is another picture. And speaking of demand, you look at China, and one day they're pumping all kinds of money into their system. The next day, the stock market there, implodes. It doesn't react fast enough. So there's just a lot of variables that you as a farmer, I don't know how you can outguess it. We can't outguess it. But again, it all circles back to just taking a really strategic approach to it right now. I wouldn't be shocked if, 4 months from now, beans could be $2 a bushel higher on weather events in South America, or drop off another 50 cents or a dollar. So how do you want to manage that and prep for it?
Good points. Good points. How about the livestock trade? Let's rope that in here a little bit. We had some good support on the futures in cattle and hogs on Thursday. It kind of started with hogs and slowly worked its way to the cattle markets too on the day Thursday. Any big things for you? It felt like just a good money flow day, Brian.
Yeah, it did. It was a risk-on day, and cattle was in particular impressive because yesterday was actually an outside day with a lower close. That's called a bearish key reversal. Well, just negated that today with a big outside day and early good close, right? So, and cattle are to the point where I'm calling it the second chance. And then I told you I wrote a paper with us. That was 2 weeks ago. I wrote on energy. This week I wrote on cattle, and my title was Second Chance. Think about the cattle market where it was probably 30 days ago, about $12 to $13 cheaper than it is now. And then 30 days before that, it was about where it is here. So it's come all the way back up. It's consolidating nicely. We just haven't been able to see the demand market really stream forward and pick up. in a fast way. Now, one thing I will say that I like that I think is supportive is the choice select spread is starting to widen out a little bit. And that tells me there's either demand for choice or there aren't as many choice animals available, which tells me farmers are staying pretty current, which has me scratching my head a little bit because it's been nice weather, weight gain should be good, and farmers are likely in the field. Of course, there's feedlots, but there's a lot of farmers who raise animals as well and have their own smaller feedlots. So I'm a little bit perplexed as to whether it's a demand-driven market, and those who can afford to spend money, stock market's pushed into new highs. Maybe they're all eating out here the last few weeks. I don't know, but I think it's a really high price historically to expect demand to grow. And I just worry that type of market is very vulnerable to what we saw there in late July, August, mid-August, when all of a sudden the market dropped in a snap. It dropped $10 to $12 a hundredweight, like days.
No, that's a great point to think about. It's I felt this way too, as I just kind of look I look at the markets every day, and I look at cattle, and I see, to your point, kind of the second chance. It feels like that. I think a lot of people have been waiting for the bottom to drop out of this cattle market at some point, kind of like the grains did, and it did somewhat, and now we're rallying back. But I guess I'm not of the opinion that this is going to last, because as we know, high prices don't necessarily always last. We have high prices cure high prices, low prices cure low prices, to use those old analogies, Brian. So to your point, I'm rambling now. I feel like the cattle markets I feel like that the potential downside risk is getting greater by the day.
Right. And the rambles because of thoughtful ideas that are coming to mind as to why the market may be, in a position to tip over. So for me, again, it goes back to the risk management. So if somebody asks me about cattle, I have to go a little deeper. Well, what do you want to know about cattle? Do you want my best guess as to the outlook? Do you want to know the numbers? Or you're saying, hey, I've got a product. What do I do with this? How do I defend it? So cut right to that question if you have that. I'm not friendly enough. I'm supply friendly. I've been supply friendly for years. You look at the drought monitor map and you still have to be supply friendly on the drought conditions and pasture, but I just don't feel like the marketplace, at least in the last year, has been able to add demand when we get into the levels that the market is currently at. And in part why the hog market may have picked up some steam here with December. I still to this day don't have any idea why it went down as hard as it did in midsummer. But there again, you're back at December hogs are back up to those prices that they were before the sell-off. So hogs, I think, have a competitive advantage right now on just value to the consumer.
Brian, any notes in the dairy trade here before we close it out today?
Yeah, same thing. Real volatile marketplace. Had some really good rally into the in a good recovery again today in the market that took a really hard beat. Last trade I got about 35 higher on the November contract, which is a good gain. We have an outside day there too with solid finishes. Earlier this week, the November contract 2067. That's a good price, but that was the lowest price in that contract since early August. So it really took a beating when it dropped, jumped up there and got into the mid 23s. And that's another market when historically we see those. I'm going to call second month contracts because the October is the first month, but it starts to level out to get in line with cash. The second month, like getting those mid 23s, 24s historically, that's been about it. And I think the traders were pretty quick to hedge and or the farmers were whomever hedging, and then once it broke through moving averages, I think they were pretty quick to exit long positions, maybe establish shorts. So right now it's trying to get its footing, but we've had a pretty big drop off in cheese and butter prices in particular. All of a sudden, butter prices went from high to where they were back in March in a matter of 2 weeks. So just a demand void. We'll see if now the marketplace comes in and finds its buyers.
Brian, good stuff as always. If folks want to reach out to you for a conversation, talk about their marketing there at Total Farm Marketing, I know a few different ways to get in contact with you. How can they reach you, Brian?
You bet. Easiest way is with a phone call, 800-334-9779. I'll start with that. I look at my emails daily. So Brian with a Y at totalfarmmarketing.com. And then we'll look over to our website and just say, hey, take a look, totalfarmmarketing.com. We got a lot of resources there. Would love to talk to you. If you have any questions, if you're in the tractor and you want to shoot some questions at me, feel free to call.
Brian Doherty with Total Farm Marketing. Always good to talk with you and get perspective, sir. Thanks for joining us this week. Appreciate it.
Thank you, Jesse. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.